Hi, markets have given back most of the gains that it made post the corporate tax cut announcement which was made in September. RBI rate cut did not bring any positive sentiments to the market. That's because market expected a big cut while they got only a small 0.25% cut from the RBI. So, should we be worried now? Not required, because we have made a decisive turn from the bottom in the markets and have been holding at the middle portion now. Let's look at what's happening in the market to get more clarity. After the bull market, which lasted for 4 years from 2014 to 17, where a normal index made 100% gains, markets went into a correction mode. It's been about 20 months now and happily been going down every day, lower and lower. At that time, the corporate tax cut announcement comes as a very big surprise. Announcement turns the market from bear to bull. It squeezed all the short sellers alive to death, thereby breaking all resistances and turning up. By resistances, what does it mean? Every time when price goes up and down, it hits a ceiling and a bottom. The ceiling is considered as a resistance. That is where it finds it little difficult to move past those numbers, and similarly on the bottom. Now when we talk about resistance, there was a resistance at around 11,130 on the Nifty, which got broke when the corporate tax cut announcement came. That is, when there is a resistance and it gets broken, like a roof gets broken and you fly through it. When you miss the balance and fall down again, chances are you will fall on this roof. This will act as a support. So any resistance that's broken becomes a support in the future moves. So that is where we are now. Markets went up and have come to the resistance, to the support zone. Apart from the government stimulus, which were mostly positive in the long run for the economy, fundamentally nothing changed for our country. September quarterly result, which is likely to be out in a few days from now, is expected to be weak, and expected weak results are already factored in the market prices today. Yet there can be some positive surprises from companies in their results. When such thing happens, those companies' stocks will get strong and have a sharp upside move. The next question that will come in our mind is, do we have those surprise stocks in our portfolio? As of now, it will be too early to know which are those stocks, while most of the mutual funds and portfolios carry good stocks in their portfolios. It's because fund managers are also left in the role to perform good always, so they will not carry any bad stocks. In such a scenario, when there are positive surprises coming up, those who are having those stocks will start doing extremely well. Today, S Bank or a DHFL or a Reliance Adak Group company stocks don't find space in any of the mutual funds or portfolios. So this is because none of them want to carry any bad stocks in their portfolio. There can still be some surprises on the default list coming in the market, which can be a known name or a totally surprising one. This uncertainty is likely to be played out in the next 2 to 3 quarters in the market. Once the cleanup is done, market is surely going to go up. The next question that will be coming to the mind is, when is that bounce going to happen? It is after September 2020 quarterly results. That is, after October 2020 is where we will see a decisive uptrend or price up move coming in the market. Markets now are in a non-trending zone. So what is a non-trend now? In the stock markets, when prices are going up higher and higher, that is called bullish uptrend. When the prices go down deeper and deeper, it is called bearish downtrend. When it is not doing both, it is called a consolidation or non-trending. It just holds a sideways range. And beauty of this sideways range is you get good stocks at cheap price and you can take your time to accumulate those. It will stay there for a longer period. There were several surprises for us. FBI tax rollback, rationalization of GST, mergers of public sector banks, and corporate tax cuts. Like it is said, once bitten, twice shy. The sellers in the market were not bitten once, they were bitten 4 times. Yes, 4 times, guys. They are not shy, they have ran away from the market for good. It will take time for them to come back. So, for selling pressure in the market, for now is ruled out.
So, why is the market down?
It's not because of selling pressure. This time it is different. There are no buyers in the market today. Strong buying of stocks comes only when there is profit growth shown in the balance sheet, which is not there now. Till the numbers come up, buying support will not be there in the market, and till the support is not there, prices will go nowhere. It will be going small, having a small up and down movement and going into a tight range. With the slowdown in the economy and all the government policies looking at long-term stability, like we had talked earlier, it will take at least 2 to 3 quarters for the market to revive and start going up. In this period, it is a golden opportunity for SIP investors because it helps them accumulate investments at lower levels, and all those units that were acquired when the markets are down is going to give very high returns when the market gets into a bull phase in a short while from now. Look at it, market is down 40% on small cap stocks. If you are buying, your SIPs are picking up units at this level at 40% down market. Even if it reaches 100, your investment is going to make 40% returns. That is the advantage of SIPs. SIPs do well when markets are down. For long-term investors, though the market is lucrative in the long run, since it is going to stay here for a quite good time, like 10 to 12 months, you can phase your investments over this period of 10 to 12 months. Put your money into liquid funds and take the systematic transfer plan route or the STP route to get into the equity market. This will help you average out and give you the advantage of having higher returns when markets turn bullish. Timing the market is next to impossible. Staying smart and being in the market, waiting with patience helps get rich rewards. Happy investing.